China has altered some trade with Taiwan in retaliation to the visit of United States House Speaker Nancy Pelosi to the island. Beijing says it's stopped importing fish and fruits from Taiwan, while exports of natural sand have also been suspended. Beijing has often targeted Taiwan's agricultural industry for punishment over political issues. In the meantime, Asia markets are mostly higher, but the mainland Chinese index gave up early gains and turned negative on the back of geopolitical tensions. Safe havens such as gold slipped today as the dollar advances after hawkish comments from the Federal Reserve. Meanwhile, chip maker TSMC says the global supply of semiconductors could be affected due to the tensions between the world's two largest economies. For more on this now, let's bring in David Madden, who is a market analyst at Equiti Capital in London. David, many thanks for joining us this morning. First of all, what do you make of this situation? How worrying is it, not only for Taiwan's economy, but for China's economy, for the US economy?
It's certainly a little worrying in terms of the raised tension surrounding Taiwan, especially considering what has been going on in Ukraine for the past number of months. It's fair to say, as far as the financial markets are concerned, this was more of a story yesterday. We saw a larger sell-off in US stocks. We saw a flight to quality play in action, whereby likes of the Japanese yen and also gold were higher. But it seems that tensions although tensions between China and the US haven't changed, the attitude from traders has kind of cooled a little. They're not as nervous as there once was. So for the time being, there seems to be much more of a big political story rather than a story for the financial markets. But obviously, it is something that traders will be paying close attention to.
Right, interesting. Less uncertainty there on markets today. Although, do you expect safe havens such as gold and such as the Japanese yen to further strengthen from now on, nevertheless?
Immediately, for the time being, it doesn't look likely. We're already seeing some losses in the likes of gold and silver this morning, despite the fact that we've had a retreat in the US dollar. As I mentioned, the moderate losses we're seeing here on European stock markets is nothing really to write home about. It all depends on what happens next. Sure, there's a lot of tough talk between the US and China. We've seen essentially military hardware being kind of pointed at each other. It all just depends what happens next. The ball is essentially in Beijing's court. Why the financial markets will be particularly worried about this is that about roughly 50% of the world's semiconductors, chips, are manufactured in Taiwan, and chips are used in everyday items from washing machines to vehicles to smartphones. There's already a large semiconductor shortage because of the fallout of the pandemic. So should we see in any kind of conflict or any kind of blockade against Taiwan, that's the sort of thing that could actually ripple out and actually really cause a lot of uncertainty within the financial markets.
Interesting, David. Once again, supply chain disruptions and inflation. Thanks for being with us today.
Thank you.